In this case, the issue is whether Won Bin, as the manager of the HB Best Restaurant, breached his fiduciary duty by using the company checks without permission. And under the Contract Act 1950, specifically Section 164 and 218, an employee acting as an agent must follow the principal's instruction and act as in their best interest. Here, Won Bin stole 2 checks and altered one of them to change the payee's name without Hyun Bin's knowledge or consent. And such action clearly shows a breach of trust, as he used his position for personal gain. This is supported by the case of Siva Puriman versus Hia Sok-kyung Realty, where an employee was held liable for misusing company's fund. Therefore, Won Bin's conduct goes against the duties expected of him as an agent, and he can be held accountable for the losses caused to the business.
For the second issue, this case concerns whether Min Ho can legally retain 10,000 ringgit received from an altered check. Hyun Bin issued the check to Sedabah Sindiran Berhad, but it was fraudulently altered by Won Bin, who inserted his own name and gave the check to Min Ho. Under Section 64(1) of the Bills of Exchange Act 1949, such an unauthorized material alteration renders the check void. Additionally, the check was crossed not negotiable, and Section 123 of the same Act states that the transferee, Min Ho, cannot obtain a better title than the fraudulent party. The common law principle Nemo that quod non habet support this. No one can transfer a better title than they possess. Cases such as Commissioners of Stamp Duties versus CUB and Ko Teng Hock confirm that materially altered checks are unenforceable and that not negotiable crossings limits transferee right. Therefore, Min Ho has no legal entitlement to the 10,000 ringgit and Hin Bin is entitled to recover the full amount.
Hello, my name is MOHAMMAD AKMAL bin NOORDIN. My number matrix is BB22161-108. The issue is whether Juta Bank, as a collecting bank, was negligent in collecting a materially altered check marked not negotiable, thereby causing loss to Hyun Bin. So, for the rules and law, under Section 85(1) of the Bill of Exchange Act 1949, a collecting bank is protected from liability only if it collects a check in good faith and without negligence. So, a check marked not negotiable requires extra scrutiny and care. And for the relevant cases included Ledbrock and Co, V. Todd and Beisel, V. Fox and Bros and Co Ltd, which emphasize the bank's duty to detect irregularities and act with caution. And then for the application, in this case, the check was originally payable to Sedabah Sendirian Berhad, but was fraudulently altered by Min Ho to make Won Bin the payee. So, despite the check being marked not negotiable, Juta Bank failed to detect the material alteration and signs of fraud. The bank teller overlooked suspicious change and the involvement of a third party and breaching their duty of care. And then for the conclusion, Juta Bank act negligently and failed to meet the standard required under Section 85(1). And as a result, the bank is not entitled to protection under the Act and is liable for the loss suffered by Hyun Bin.
Next, the issue is whether Rupa Bank is liable for the tort of conversion after handling a check that had been stolen and altered by an employee named Robert. Conversion, in legal terms, refers to the wrongful interference with someone else's property, including negotiable instruments like checks. In the landmark case, Vilman versus Canadian Imperial Bank of Commerce, 1974, a bank was held liable for processing a check on behalf of someone without lawful title. In this case, Robert stole a check from his employer, Roberto, and altered the payee's name by removing the final O to make it appear payable to himself. He deposited this check into a newly opened account at Rupa Bank, where a bank officer, Ms. Jana, failed to make proper inquiries regarding the check's legitimacy. Because Robert had no legal title and Rupa Bank accepted and processed the check without due diligence, the bank effectively interfered with property that belonged to Roberto. This act constitutes the thought of conversion. In conclusions, Rupa Bank may be held liable for conversion as it collected a stolen and altered check for a person with no lawful entitlement. Roberto, as the rightful owner, has grounds for a claim against the bank.
Next is Issue 5. Issue 5 is whether Rupa Bank, through Ms. Jana, has violated regulatory compliance when opening an account for Robert without conducting proper verification. Under Section 16.2 of Anti-Money Laundering Act, banks must verify identity before opening accounts. Section 1231 of the Financial Services Act also imposes a duty of due diligence and integrity. Bank Negara Malaysia's latest policy, which is effective on February 2024, also reinforces this by requiring risk-based verification and detection of suspicious behavior at onboarding. Furthermore, the case of Arab Malaysian Finance versus Taman Ihsan Jaya further stresses that financial institutions must uphold their responsibilities. So in conclusion for Issue 5, Rupa Bank failed to meet its customer due diligence obligations. The failure to verify Robert's identity or investigate the suspicious check clearly breaches both statutory and regulatory requirements. As a result, the bank may face action from Bank Negara Malaysia and potential claims from parties like Roberto. Next, Issue 6 is whether Rupa Bank is liable in conversion for dealing with a check in favor of a person with no title. Here, Won Bin stole a blank check, inserted his name, forged the signature, and presented it at Rupa Bank. Despite the check being cross-account payee and the signature appearing suspicious, the official still cashed it. This is a textbook example of wrongful interference with someone else's property, also known as conversion. Section 24 of the Bills of Exchange Act makes a check with a forged signature wholly inoperative. Rupa Bank also violated Section 1231 of the Financial Services Act, which mandates proper care. Also in Malayan Banking versus Yap Hian Lee, the court confirmed that a bank paying a forged check is liable. Furthermore, the United Malayan Banking Corp versus Pemungut Hasil Tanah case clarified that account pay crossings must be strictly observed. Lastly, in Bank of India versus Chartered Bank, collecting for someone with a title was held to be conversion, supporting Hyun Bin's claim. To summarize Issue 6, Rupa Bank failed to prevent a forged check from being cashed despite clear warning signs and a restrictive crossing. This shows negligence and amounts to conversion. The bank enabled the wrongful loss of funds and will likely be held liable to Hyun Bin for the 15,000 ringgit.
The issue is whether Rupa Bank is liable for collecting a stolen check for 20,000 present by Robert and for failing to verify his identity before opening a new account. So, the rules and law, Section 85(1) of the Bills of Exchange Act 1949 state that a bank is only liable if it acts with negligence or in bad faith. In addition, under the Anti-Money Laundering Act 2001, AMLA, bank must perform Know Your Customer (KYC) procedure and report suspicious transaction. The case of Marfani and Co. Ltd v Midland Bank Ltd support the requirement of thorough customer verification. And for the application, Robert stole a check from Roberto and altered the name by erasing the O to make it appear as his own. So Rupa Bank staff, specifically Miss Jana, failed to carry out the required KYC check and allow Robert to open an account without proper identity verification. So this failure led to the check being wrongly credited and the rightful owner suffering financial loss. And then for the conclusion, Rupa Bank breached its duty under both Section 85(1) and AMLA 2001. Its negligence in verifying customer identity contribute to the fraudulent transaction and making the bank liable for the loss incurred by Roberto.